Welcome to this technical deep dive on Berkshire Hathaway Class B shares, ticker BRK.B. Today we're looking at what I'm calling the coiled spring, a market that's reached perfect equilibrium and is primed for a major directional move. We'll break down the evidence, the key levels, and what it all means for traders and investors. Let's get started. Here's the verdict in brief. I'm staying neutral and recommending a hold on BRK.B right now. The stock is locked in a state of perfect equilibrium. Every major indicator is pointing to intense consolidation, which historically precedes a significant breakout or breakdown. The evidence is unified. A historic convergence of moving averages, completely dormant momentum, and historically low volatility all confirm a non-trending, directionless market. The strategy is simple: patience and precision. Wait for a confirmed signal. Watch for a decisive breakout above $502 to go long, or a breakdown below $491 to consider shorts or hedges. Let's look at the current price action. BRK.B is trapped in an exceptionally tight range. This is classic spring compression. The stock has been coiling tighter and tighter, showing extreme indecision between buyers and sellers before a potential big directional move. As of the latest close, BRK.B is sitting at $496.85, right in the heart of this narrowing range. You can see on the chart how the price has flattened out over recent months, setting the stage for something significant. One of the most remarkable things happening right now is this historic convergence of major moving averages. The 20-day, 50-day, and 200-day simple moving averages have all clustered around virtually the same price point, a rare event that signals a perfectly flat long-term trend and extended sideways consolidation. The price is currently testing this crucial inflection zone. Looking at the data dashboard, current price, $496.85 20-day SMA, $499.73 50-day SMA, $498.14 200-day SMA, $497.91. All within just a few dollars of each other. This level of alignment is extraordinary. Now let's dissect the coil. Part 1. Momentum is at absolute zero. Both the relative strength index and MACD are sitting dead neutral. The RSI is reading 46.17 right in the middle of the 30 to 70 neutral zone, and the MACD is essentially flat at 0.05, labeled flat, dormant. This tells us there's a perfect balance between buyers and sellers. Neither the bulls nor the bears have control. Momentum is completely asleep, a hallmark of extreme consolidation. Part 2 of the coil. Volatility has completely collapsed. The Bollinger bands have narrowed dramatically, upper band at $508.16, lower band at $491.30, showing the tightest squeeze in months. Meanwhile, the average directional index, or ADX, is reading just 11.42, firmly in the very weak, non-trending territory. When the ADX is this low, trend-following strategies tend to fail. This is a pure non-trending market, the calm before the storm. Here's the battleground, the key levels that matter most. Immediate resistance sits around $502, with R1 at $501.52 and psychological $500 overhead. Support cluster below, pivot at $497.21, S1 at $492.55, and the lower Bollinger band at $491.30. The price is currently pinned right between these levels. A decisive, confirmed break, either above $502 or below $491, will be required to establish a new trend. Until then, we're stuck in no man's land. Additional indicators only reinforce the indecision. First, market context. BRK.B has a beta of 0.988, meaning it moves almost perfectly in line with the S&P 500. This consolidation isn't unique to Berkshire, it's reflecting broader market uncertainty. The stock carries average market risk. Second, Short-term oscillation. The stochastic oscillator shows %K at 56.52 and %D at 62.85 squarely in the neutral zone. This confirms the choppy, directionless price action with no sustained buying or selling pressure. So what's the strategic playbook? Patience and predefined triggers. Current state, BRK.B at $496.85 pure equilibrium. Bullish trigger, a confirmed breakout and close above $502. That would signal volatility expansion and the end of consolidation, time to initiate long positions. Bearish trigger, a confirmed breakdown and close below $491. That would mean support has failed and a new downtrend is likely beginning. Consider shorts or protective hedging. For range traders willing to play the edges, a potential low-risk setup is buying near support around $492 with a tight stop loss, targeting the top of the range near $502. In summary, BRK.B is in a confirmed state of equilibrium and consolidation. The directional bias is unknown, but the technical picture is extraordinarily clear. This coiled spring is waiting for release. When the breakout finally comes, whichever direction it goes, it is likely to be significant and sustained. Patience remains the name of the game. Stay disciplined, watch those key levels, and be ready to act when the signal arrives. Important disclaimer: this presentation is for educational purposes only and does not constitute financial advice. All investment decisions should be made with the help of a qualified financial professional. Trading stocks involves substantial risk, and past performance is not indicative of future results. Thanks for watching. If you found this analysis helpful, please like, subscribe, and hit the bell for more technical breakdowns. See you in the next one.